How do you see that liquidity market playing out for the kind of the buyer and seller gap?
Yeah, that's like the question, right? And my answer is it depends. It depends a little bit on the geography. You mentioned Chicago and lower Midwest. I think those industrial markets have been doing well. Southeast. It depends on the property type. Obviously, an industrial data center, particularly versus maybe multifamily retail has been crushing it. But more importantly, I think it kind of depends on each individual owner's seller's situation. Where they are in their asset life cycle, where they are with their capital partners life cycle. There has been, I would say, more enthusiasm, generally speaking. I think we've all seen it since the election for a number of reasons. Maybe your candidate won, maybe not. But I think having that understanding and clarity of where we might be on an outcome kind of loosened up a lot of sentiment, both capital markets, if you will, investors, but also business investment decision making. I think some numbers in the past month have tempered a little bit if I look at some indices. But generally speaking, I think people are looking at making investment decisions, whether they're occupiers or property owners, right? And if I combine that with where certain property owners might be in their investor life cycle, their building life cycle, you're going to see more transactions this year. And there's definitely appetite to start buying again after this, you want to call it nuclear winter for the past 2.5 years. Real estate people are acquisition minded and we want to get back to work. So there's now interest to get something done. But yeah, I think your point is spot on, is where is that bid ask gap, right? And it is still pretty wide, but I think depending on the pressure and the situation, people are transacting. If I go back, don't want to jump way around, but I was looking at cap rates, industrial spreads to treasuries. And I think the 2010 to 2020 average spread was something like, I should have memorized this, I think like 340 basis points. Obviously, pre-COVID industrial was a different market, different appetite. That came down to about 100 basis points in early 24, even during the nuclear winter, right? I think it's probably gapped up a little bit now because things are starting to loosen up, but that's still a pretty good spread for the industrial market, right? And I think that demonstrates the appetite there. So while cap rates have gapped up a little bit more for Class B industrial versus Class A, deals are starting to get done.